Before getting started with today's episode, I'd like to thank the sponsors behind Web3 Deep Dive. Thank you to Merlin Chain. Merlin Chain is committed to empowering Bitcoin's native assets, protocols, and products on Layer 1 through its Layer 2 network to make Bitcoin fun again. Thank you to Freedom GPT. Freedom GPT is the app store for artificial intelligence that allows anyone to access any AI model. Finally, thanks to JTX Media for the video and audio production behind this podcast, based out of Austin, Texas. Hi, everyone. Welcome back to Web3 Deep Dive Podcast. I'm your host, Rachel Wolfson. I'm so excited for today's interview. Today, I'm joined by a very special guest, Sergey Nazarov. He is the co-founder of Chainlink. Let's get started with today's interview. Hi, Sergey. How's it going?
Going well. Thank you for having me.
Yeah, thank you for coming on. You are a very popular person in the crypto industry, so it's a pleasure to have you.
Thank you again.
Yeah. Sergey, before we get started, could you tell us a little bit about your background and how you got involved in the crypto industry?
Yeah, so I got involved in the crypto industry in 2010, where all you could really do was mine Bitcoin. So I had some GPUs and I started doing that. I came more from the gaming community, so there were 3 communities at that time. There's the cypherpunk community that actually built the thing and was into ideology. There was the speculator community. And then there was a kind of miner community that had a subset of people that were basically just using excess GPUs that they had. And so I came into the industry through that. And then over the course of about 4 years, the industry evolved to see the first smart contracts appear. And I was involved in building some of the first smart contracts that existed even before Ethereum or some of the current systems. And then after building smart contracts for a few years, it became clear that oracles and what we invented was Oracle networks are the thing that smart contracts are missing for more advanced use cases like DeFi. And so then we were able to grow the DeFi industry from sub 100 million to over 200 billion over the course of basically putting over 1,000 Oracle networks on chain. So then we invented Oracle networks and we made 1,000 Oracle networks go live, which is what drove the growth of DeFi. And now we're kind of in a place where the real world asset trend and capital markets are colliding with the blockchain industry, and we're kind of at the epicenter of that at this point.
Right. For our listeners that don't know, can you explain what Chainlink is doing and what Chainlink is?
Sure. So Chainlink is infrastructure that connects and validates all data, and that connects and validates all connections between chains and from chains to existing systems. So blockchains in and of themselves are very self-contained. They don't have the ability to interact with other chains. They don't have the ability to interact with data. They don't have the ability to interact with payment systems. So they're very limited in what they can do. They can just do computations on tokens that are made inside of them, basically. And what Oracle networks do, which was the thing that Chainlink invented, is validate things about the external world, like any data. It can also validate a connection between chains, and it can also validate a connection from chains to existing systems like the Swift payment network. So basically, Oracle networks supercharge smart contracts, and DeFi is an early version of that supercharging that has gone semi-mainstream or mainstream in the crypto community, and real-world asset tokenization is another use case. But there are many use cases. So decentralized insurance, blockchain gaming, these are all use cases powered by Oracle networks. So whatever more advanced use case you're interested in, beyond just the creation of a cryptocurrency, there's a very good chance that Oracle networks are required technology for that more advanced smart contract use case.
Let's talk a little bit about RWA tokenization, because I was actually just speaking with someone before our interview about this concept has been around for a long time, tokenizing real world assets. But for some reason, now we're starting to see this kind of explode. Why is that the case? Like, has the technology matured and changed over time where more people are doing it now, or is it a regulatory thing?
So I think it's a few things. The first thing is that the market for real world asset adoption has increased to a sufficiently large size. And that creates a market demand that people want to service by making real world assets. Like the crypto industry is at 2.5 trillion now. Before it was a trillion, before that was 200 billion, before that was less than 200 billion, right? So basically the market dynamics are pulling real world assets out of the market as a product. The second thing is that, yeah, the technology has matured, so it's much easier to make a chain, much easier to make tokenized assets. It's much easier with Chainlink to put data into the token about the underlying asset, because real world assets are connected to real world things. So they need to have data about those real world things fed into them on chain. And so that infrastructure, Chainlink had a 5-year anniversary on being on mainnet, actually today, May 30th. So 5 years ago, there wasn't a reliable way to put data into blockchains for something like RWAs. So yeah, it's the maturity of the technology. And then the final thing I would say is really that the global financial system, the traditional capital markets, TradFi, are starting to move into the blockchain industry and into the crypto kind of world. And the thing that the traditional TradFi folks are very good at doing is securitization. So securitization is basically the packaging of something in a financial product. And real world assets are basically a nice word for securitization of various assets. And so as the TradFi capital markets community starts to come into the kind of crypto blockchain world, it's very natural that one of the first things they would do is exactly what they're good at doing, which is securitizing things. And securitization of real estate, treasuries, any number of asset types is just very easy and natural for them. And so as there's more legal clarity, it becomes even easier for them to do that. So some initial legal clarity has allowed them to start doing that, but as the legal clarity reaches new and higher levels of assurance that it's okay to make real world assets as an institution or as a TradFi firm, there'll be even more real world assets. Personally, I think real world assets can actually surpass the total value of cryptocurrencies. So if you think about all the assets that can be tokenized, and you look at the 2.5 trillion cryptocurrency market, I think the amount of assets that can be tokenized is in the hundreds of trillions. So I think we can actually be looking at a world where the blockchain industry is defined by real world assets more so than cryptocurrencies at some point.
Wow, that's amazing. Really good insights. I wonder when that may happen, but we don't have to make predictions.
I want to take this time to thank the sponsor behind Web3 Deep Dive podcast, Merlin Chain. Merlin Chain is a Bitcoin Layer 2 that integrates zero-knowledge rollup, decentralized Oracle network, and on-chain BTC fraud modules. Merlin Chain is committed to empowering Bitcoin native assets, protocols, and products on Layer 1 through its Layer 2 network to make Bitcoin fun again. Merlin Chain is a subsidiary product line of Bitmap Tech, a premier OG team boasting an overall market cap exceeding $500 million. The BRC 420 Blue Box collection under Bitmap Tech has become one of the hottest assets on ordinals.
Now, Chainlink recently had a collaboration with the DTCC, and maybe, I'm not sure if I'm going to get the acronym right, but can you explain what that collaboration is and what the DTCC is?
Sure. So I think that stands for Depository, Trust, and Clearing Corporation. So the DTCC came into existence in the 70s to basically digitize the securities markets. So before the DTCC, ownership and trading and settlement and execution of trades was done on paper. So DTCC is the infrastructure that digitized the US securities industry, and the US securities industry is the largest industry securities market in the world, and the one that all securities markets try to replicate, and frankly the one with the best equity, not just from the US market, but from all global firms, right? So basically the DTCC is at the epicenter of how all transactions happen for all equities and various other instruments. And they clear and settle $2 to $4 quadrillion per year, depending on the year. So before I learned more about the clearing and settlement system of systems of the world, I didn't even know the number quadrillion. So this is literally the biggest system in the world for settling and transacting value. And the DTCC is something that defines how transactions happen legally. So you can't actually do a certain size of equity trade or a certain amount of equity trades or a certain amount of trades of certain types without it passing through the DTCC, because the DTCC gives it legal standing. So they create what we call legal finality. So there can be technical finality, and that can vary by people's views of that. Like 6 blocks is often viewed as technical finality for your risk to be low enough about a blockchain transaction. But that does not give you legal finality. Legal finality is where the legal system basically says that the transaction is final according to the law. The DTCC does that and has done that for, I guess, over 50 years or something like 50 years for the global securities markets. And they will be the ones, in my opinion, to define that for the blockchain transactions of the future. And the numbers, once again, that we're talking about here are not 2.5 trillion. Like, the retail community and the hedge fund community and the prop trader community of the world can maybe take the cryptocurrency or the blockchain industry to 10 trillion, right? So maybe we can 3 to 4x the size of the blockchain crypto industry, which is great. But realistically, the value that sits and is transacted in the DTCC, over SWIFT, over all these existing systems is in the hundreds of trillions. So our industry simply won't reach anywhere close to its full potential without those systems and that value flowing into our industry. And the DTCC is an important component of how that's going to happen. It's actually more of a public good than a for-profit entity, which people sometimes confuse about some of these market infrastructures. But it's not exactly purely a public good, but it's basically controlled and run by the U.S. government as more or less as a public good, and it is basically the infrastructure that powers the U.S. and to a certain degree the global securities markets. So it's the most significant market infrastructure player in the world, in my opinion. And the fact that they are interested in blockchains and that blockchains will be how transactions happen and that blockchains need interoperability and that blockchains need data. The thing we did with them was around data and interoperability, which are 2 of the things that Chainlink is basically the world leader in. It's the ability to put data into chains, and it's the ability to make data and tokens move across chains. That's kind of 2 of the 4 things that Chainlink is exceptionally good at and the world leader in. And so we worked with them to put critical data about funds on chain, and this was the first step towards what's called fund tokenization. So even just the fund industry is 100 to 100 trillion plus in value just in funds. And so if you do fund tokenization, you're going to need data, and you're going to need those tokenized funds to be connected to other chains. And so this is what we kind of made a very large incremental step towards, and then the subsequent steps will be more fund tokenization, more advanced kind of steps in that direction. But the initial step was around getting critical data about the fund on chain to create transparency and to allow a fund to operate on chain. This was namely the NAV data, or the valuation of the fund, and also the ability to move and interact with that data across chains.
Mm-hmm. When you say fund, can you be more specific? So what do you mean by specifically?
Sure. So it could be any fund. It could be a mutual fund.
Okay.
It could be a private equity fund.
Okay.
It's just a holding container for different assets, whether that's private equity assets or treasuries or money market assets or whatever set of assets. So funds are kind of just holding containers for different types of assets.
Yeah.
Mutual funds hold a bunch of different stuff. Index funds hold an index. Private equity funds hold private equity. Venture capital funds hold venture capital investments. That's what I mean.
Has it been challenging at all to get, major institutions like the DTCC to consider blockchain technology? I mean, it's crazy that we're seeing that now. It doesn't seem like it's easy.
I mean, it's not super easy. We've been working with SWIFT, for example, for over 7 years, for a number of years, interacting on and off many times with the DTCC, having great conversations, providing some technology, kind of helping people think through and collaborate on how to move this forward. I think the thing I didn't understand before working with a large institution like SWIFT for over 7 years, or for a number of years with large market infrastructures like DTCC or large banks, is that I have always existed in the startup world where decisions are very quick. And often decisions are very quick in the startup world because there's very little at stake. Basically, if some startup with 3 people that doesn't secure anything makes a decision, it doesn't really matter. There's no real value at risk. But what I've noticed in working with DeFi protocols that went from securing no value to securing $1 million, to securing 100 million, to securing $1 billion, to securing over 10 billion, to securing over 20 billion. These are actual protocols that we've worked with, empowered, and worked with their teams. And then I've also worked with institutions that have secured over $1 trillion, some of these institutions, tens of trillions, right? Basically, the more money you're responsible for, the more risky it is to make a mistake, and the more people and processes there are in place to make sure you don't make a mistake. Which after you go through, once you work with enough of these different institutions at different sizes, you kind of start to understand why that is. Because the cost and the magnitude of a mistake when you process $2 to $4 quadrillion is much, much larger when you're a 3-person startup processing no value. And so there's a logical reason for this, right? Plus there's a ton of regulation, there's a ton of liability issues, a ton of legal questions, there's a ton of stuff that tries to keep all of these things that process a lot of value as financial market infrastructure in a kind of very clear box of behavior that they have to follow. So it can be challenging because there's a lot of processes, a lot of steps, a lot of people need to be involved. But as I've gone through it more and more, I've come to realize the reasons for it. And as our system has grown to enable over $11 trillion US dollars in transaction value through the system, I've come to also personally understand that some decisions need to be reviewed and thought through and go through a systematic process. So I've kind of gone from a world of why can't you just make a decision to, oh, okay, I understand why you can't make a decision. There's a lot of considerations that come into your decision.
Right.
FreedomGPT is an app store for AI. FreedomGPT is most commonly known for its censor-free AI model called Liberty that answers literally any prompt you ask with an unbiased response. Unlike other AIs where controversial topics are off limits, FreedomGPT embraces the concept that you should be able to ask AI anything. Equally important, FreedomGPT has the option to be run locally on your computer so your data remains 100% private and secure. Check out FreedomGPT's over 80 AI models today.
I know we're running low on time, so do you have any final thoughts to share with our listeners, maybe what's next for Chainlink or just what you're excited about in general?
I'm generally excited about our industry becoming the way the world works. And I think for that to happen, our industry has to provide secure, reliable infrastructure that doesn't suffer failures where people lose tens of billions of dollars to some weird financial construction like FTX or Terra or something. I think there needs to be infrastructure that's highly reliable to bridge value and data across chains, so you don't have 600 million bridge hacks. You don't have bridge hacks that lead people to lose value. So I think it's important that our industry becomes the way the world works. That's what I'm personally working towards. I think for that to happen, you need to have a level of security and reliability such that people will be comfortable putting their value into the system. I think that requires high quality protocols and infrastructure that take security and reliability seriously. And then I think the final big piece of that is that in addition to a good community of very innovative, fast-moving, smart teams building things like DeFi, more advanced RWAs in the public chain world, I think we need to find a way to migrate all of the value in the traditional world into the blockchain format. Whether that's on a private chain or whether that's on a public chain, initially doesn't really matter. What matters is just like paper was converted into digital database records, and that is how the world works today, that those digital database records that secure the world's value now get converted into the blockchain format. So I would say if we can do those things and maybe improve the user experience of the space and the scalability as well, we can really be our industry can be the way the world works, which is something that I find very exciting.
Yeah, well, that excites me, and I think we have a bright future ahead. Thank you, Sergey.
My pleasure. Thank you.
I'd also like to thank the sponsors behind Web3 Deep Dive. You can click the links in the show notes to learn more about each of the Web3 initiatives from these sponsors. Finally, thanks to the listeners for tuning in. Please be sure to subscribe, like, and share. I'll see you guys next time.